Tariffs, interest rates, inventory, and affordability are all front page news. What does that mean for the Omaha real estate market? What does it mean if you're in the market to buy a home this spring? I'll break down the numbers so you can make an informed decision in today's marketplace, and we're going to get started right now. When we look at the numbers, we're going to be looking at Douglas and Sarpy County, Nebraska. For Douglas County, this includes the city of Omaha and the towns of Ralston, Bennington, Waterloo, and Valley, Nebraska. Sarpy County is just south of Douglas County and includes the cities of Bellevue, Papillion, La Vista, Gretna, and Springfield, Nebraska. Let's look at the current inventory. Currently, we have 1,775 homes on the active market. That's up 13.9% compared to 2024. More inventory means more choices for buyers, which is good for the market. If we look at new versus existing, we have 983 new homes on the market. This is up 7.2% compared to 2024. However, that doesn't tell the entire story. Some of these homes are at foundation or at lot stage. It doesn't mean that there's a glut of newly built homes completed and vacant and the builder is bleeding money. In fact, on the MLS, about 600 of these new construction homes are listed as UC, which means under construction. So even if a buyer were to purchase one of these homes, it is not complete and still needs to finish construction. For existing homes, we currently have 791 existing homes on the market. That is a 23.4% increase compared to 2024. If we compare new versus existing over the past 10 years and look at a 3-month rolling average, we see existing homes in red follow a very distinct pattern. In February and March, the number of existing homes for sale tends to bottom out. And as we come into spring, the number of homes for sale increases. The green line represents new construction. We can see pre-pandemic, we were ranging between 550 and 750 new homes on the market. Then, as we went into the pandemic market, new construction dipped below 500 homes. Then, in late 2022, new construction increased close to 1,000 homes available. Part of that increase is due to the introduction of D.R. Horton in the Omaha market. D.R. Horton started around 2021. So I think that some of these numbers are due to the presence in the marketplace. I also think it says something about the growth of our metro area. A builder like D.R. Horton, they want to make money, and they see our market as an opportunity, and they're going to take advantage of that opportunity. One more point about new construction. Sometimes a builder will sell a home, list it as an active listing, even though it's already under contract with a buyer. The home will be under construction, and in the public remarks, it'll say contract pending. They do this for marketing purposes to generate more leads for their product. Now let's talk home prices. The median sale price in Douglas and Sarpy County was $317,243. That's up 2.5% compared to a year ago. If we compare new versus existing, the median closed sales price for a new construction home was $412,200, which is down 1.1% compared to 2024. Does this mean the new construction market is about to crash? No. Builders will adjust to the market. They're not dumb. They will adjust to the market. They will build a slightly smaller product just to keep the wheels turning. And why is that? Well, it comes down to just simply making money. Builders who build a larger new construction home, they don't build until they have a buyer under contract. Is affordability a problem? Yes. Remember, a market like Omaha is still very affordable compared to other larger metropolitan areas. We are very fortunate we have new construction. I have a friend who is out of Bergen County, New Jersey, just outside New York City. They have no new construction. The existing market is all they have, and that means prices are sky high. You have to remember, real estate is local. Too many people get caught up in the national news with real estate. Real estate is like the weather. It's all local. In a market like Omaha, I just helped some buyers purchase a brand new home in Westbury Creek, an incredible 4-bedroom, 3-bathroom ranch with a 3-car garage, a finished basement on a walkout lot with just over 2,800 finished square feet. These buyers were able to make some custom changes, and they picked up a beautiful home for only around $475,000 in the Elkhorn School District. What about existing home prices? The median sale price for an existing home in Douglas and Sarpy County was $290,000. This is up 3.6% compared to 2024. If we look at prices over the past 10 years and look at the 12-month rolling average, we see prices steadily going up for existing. In the new construction market, prices peaked in July of 2023, and since then, prices in new construction have backed off. Again, I don't see that as a correction. I view that as builders selling smaller homes to adjust for the increase in interest rates. If we look at the same time frame, only now compare the price per square foot, we see the new construction market at $257 a square foot and $212 a square foot for the existing market. Are prices going to be correcting? Nobody knows for sure. However, if you think prices are going to go down just because prices are so unaffordable, you might be in for some disappointment. First, look at some of the demographics of Omaha, Nebraska. The largest segment of the Omaha population is between 25 and 34 years of age. According to the National Association of Realtors, the median age for the first-time home buyer was 38 years old. This means the largest segment of the Omaha population of Omaha is approaching peak age for marriage and for buying their first home. Young, newly married couples looking to start a family want to buy a home. If they have 2 decent incomes in the Omaha market, they can afford to purchase. The Omaha market is a very steady market. We don't have the high highs and the low lows that you see at other markets. Even during the great financial crisis, prices did not tank like other markets. So if you think prices have to come down, you might be running east looking for a sunset. Plus, we have folks moving to Nebraska. Drive around the city. You're going to see plenty of cranes. Cranes are good for the real estate market. That means growth and that means jobs. People are attracted to our high quality of life. If you can afford it, and if you plan on being in your new home for at least 5 years and you have enough money saved up for an emergency, I think you're going to be just fine. Look at the data versus what you hear on the news or what's on YouTube. I get it. I'm a real estate agent. You think I'm trying to sell you a home. If you don't want to buy, or if you don't feel comfortable, or if you think prices are going to crash, then do what you want to do. Even if prices come down, that doesn't mean you have to take a loss. There's a story back in 2008, a reporter approached Warren Buffett and let him know that he lost $10 billion in a day. And Warren said that he didn't lose anything because he didn't sell. You have to approach home ownership in the same way. Buy a decent house, do your due diligence, homes sell for market value. You're not going to get a deal unless you find a VA assumption. Homes sell for market value. Also, you got to plan for your insurance to go up and your property taxes to go up. When you rent, guess what? When taxes and insurance goes up, your rent goes up. No matter if you rent or if you buy, there's going to be a cost associated with housing. You don't know more than the market. A few years ago, I had a buyer who was upset that interest rates went up to 4.5%, and they missed out on the 3% interest rates. And they were also upset that prices were going up. Well, and they convinced themselves that prices were going to come down and interest rates were going to come down. Well, guess what? Those folks are still renting. Since then, prices have gone up and interest rates have gone up right along with it. It boils down to supply and demand. Will some individual markets across the nation take a hit? Yes. But in any market, at any time, there's always going to be markets that go boom and bust. I hear people say we have record credit card debt, student loan debt. Fewer and fewer people can afford a home. And that's all true. I think what is really occurring is that we have a hollowing out of the middle class. Let's talk interest rates. Currently, the 30-year fixed rate mortgage is at 6.72%. The 30-year fixed rate mortgage is tied to the 10-year Treasury yield. When bad economic news occurs, you tend to see a drop in the 10-year Treasury. Investors tend to move money out of riskier assets like stocks and into treasuries when bad economic data is weak. This increased demand pushes up bond prices. As bond prices increase, the yield on the 10-year Treasury decreases. So, bad economic news is good news for interest rates. Now, what is the bad economic news? Markets don't like uncertainty. If tariffs go into effect, those will get passed on to the consumer. Home builders get around 25 to 30% of the lumber used for new construction from Canada. If the cost to build increases, the home buyer buying that new home is going to pay for that increase. That's going to slow down an already strained housing market. Since close to 20% of the GDP is tied to housing, that's bad for the economy. A slowing economy means fewer homes sold. Where are we at for closed sales? For February, we had 576 closed sales in Douglas and Sarpy County. That's a drop of 9% compared to 2024. Over the past decade, this was the worst February we've experienced in terms of the number of sales. If rates go lower, I think you'll see the number of sales increase. But if rates stay elevated, you'll see sales remain depressed. Let's talk months of supply. Currently, we have 2 months of supply on the market. That means if no other homes come on the market, it will take 2 months to exhaust the current inventory. If we compare new versus existing, we have 6.7 months of inventory in the new construction market and 1.1 month of inventory in the existing market. 6.7 months of inventory is a buyer's market and 1.1 months of inventory is a seller's market. Now remember, some of those new construction homes are still under construction. How long is it taking for homes to sell? The median days on market is currently 10 days on the market. As a reminder, that means 50% of the homes sold in 10 days or less, and 50% of the homes sold in 10 days or more. Homes that are priced right, staged, and clean, and below $300,000 can still receive multiple offers. I was out with 2 sets of buyers about 2 weeks ago, and both were in multiple offer situations. However, it's not the market that it was 3 years ago. What about the price of lumber? Lumber is at a yearly high. Lumber is currently at $655 for 1,000 board feet. The more lumber costs, the more it costs to build a home. An increase in the cost of lumber will not help home sales. Let's talk about inflation. Last month, the inflation rate was at 3.0%. That has been trending in the wrong direction. The numbers for February are not out yet, but we want to keep an eye on it to see where it's heading. Slower economic growth is good for the inflation rate, but slow economic growth is bad because a slowing economy, you see a loss of jobs. Let's talk jobs. The numbers are not out yet for March. However, in February, the nation's unemployment rate was at 3.8% versus 3.5% in 2024. In Douglas County, the current unemployment rate is at 2.9% versus 2.5% in 2024. And in Sarpy County, the current unemployment rate is at 2.6% versus 2.2% in 2024. Job loss is bad for the housing market because when someone loses a job, they're obviously not going to be buying a home. However, there's always going to be a real estate market. When people get married, get divorced, pass away, or have kids, that creates a real estate need and that creates a real estate transaction. There's always going to be a real estate market.